normally get a signal from a colleague and she's already sent it, so it's pretty immediate. So I guess we can start, Samantha, whenever you're ready.
Great. Hi, everyone. I'm delighted you could join us today. My name is Samantha Taylor, and I'm an analyst at iFi Global. Welcome to our podcast and webinar on sustainable investment trends. Today, we'll be covering the latest development in institutional investors' sustainable allocations, touching upon our latest findings from our 2025 report. Simon Osborne, our CEO, is going to give a presentation for approximately 20 to 25 minutes, and then we'll open the floor up for questions. Please do use the Q&A button at the bottom of your screen if you'd like to ask us some questions. We will end at or before quarter to the hour, depending on how many we receive. So I will now hand you over to Simon.
Thank you very much, Samantha, and welcome to you all. We're delighted you could join us today. As is pretty much always the case when we do these things, we're delighted to see that there's a number of people in a wide range of different countries following this discussion. So you're all very welcome. And also, we're delighted whenever we do these things, we all always or almost always see new names. And for those of you who don't know iFi Global, I should tell you that we are a research and media house based in the City of London. We have 3 monthly publications and 1 weekly. One of those 3 monthly publications is Sustainable Investment Intelligence. Obviously, that's what we are focusing upon today. And of those 3, it is the fastest growing publication in our stable. The reason we decided to do this particular podcast at this time is we think this has been, in all the years we've been following this particular topic, the most interesting year, in some ways, the most interesting year by far in terms of the allocations that are going from LPs into the different sustainable sectors. And I'm going to come on and say a little bit more about that in a minute. There's been a lot going on under the surface that you probably, or in many cases, I would have thought many of you, if not all of you, might not necessarily be aware of. And that's hopefully the most important point that we can make to you today. The figures are the figures, and you'll be able to see figures we've got in a second, but it's what's going on under the surface, which we think is very interesting, and we think we'll see more of that next year and beyond. And as I say, in a few minutes, we will be getting into that. So today we're going to start with a review of the allocations into all the sustainable sectors that we cover. And then we're going to highlight or give some examples of the diversity and the growing creativity that we see in allocations going into the sustainable sectors, pretty much across the board. We'll talk about that in a few minutes. We see in particular more co-investing. In fact, co-investing perhaps in some cases isn't necessarily exactly the right term. It is in some cases, it is very much the right term. But I'm going to invent a new term here today. I would call it partnership investing. There is quite a lot more partnership investing going on in this sector of the investment industry than there is in any other. So I like to think I've coined a phrase today. So that's something hopefully we've achieved here this afternoon, Samantha. And finally, we're going to talk about the increase in what I've termed, this may be the wrong term, micro investing, but there is quite a lot more direct investing going on by different types of LPs into very specific types of sustainable projects. Right, let's start though with the growth overall headline allocation information that we have. So this is from an entity that Samantha has spent a lot of her time over the last, is it 3 or more years now, Samantha, you've been working on this?
Yeah, 3 years. Yeah.
We call it the Environmental Investment Monitor. We picked the word environmental so it could be distinguished from sustainable because all these overlapping terms. Back then, I think it's even more than 3 years ago now, but at least 3 years ago, we picked these 5 categories that we would be tracking on a continuous basis from that point onwards. Four of them, I guess you can say, are in the natural capital area, and then there is renewables. And that's really in SII we cover climate change in considerable detail and other topics as well. But in terms of the Environmental Investment Monitor and what we track, this is it. These are the areas, and we picked those, by the way, because when we first, going back to whenever it was, 2021 or 2022, when we first started analysing what pension funds and family offices and the like were investing in, we broadly broke it down into those five categories. We didn't want to miss anything, and we used ourselves, not taking what the industry did, those five particular categories. And people call these things by different names, but that's basically that's it from our point of view. So you will see. Oh, one other important point. Back then, I think it's changed quite a lot since we started. There were still back then in 2021 and 2022, some, not many even then, but there was still some pension funds when they were doing or talking about or reporting on their allocations to sustainability or what they were doing with regard to sustainability. It could be just negative screening. In other words, they were screening out polluting oil and gas companies or other entities that were considered anti-ESG, which was a much more popular term back then than it is today. So that was some pension funds back then. Again, I repeat, not very many, but some. And then there were other pension funds who, if they were making positive allocations, it would be to some of these very, very, very large transition funds. So in our Environmental Investment Monitor, we know who those pension funds are, but we haven't really been tracking their allocations because they weren't doing anything either with a third-party manager or by themselves into the market, into these sectors here. I think it's changed a lot since then, but this is now the vast bulk of the LP market, which is allocating into the sectors that you see on your screen now. And by the way, we have, I think it's over 400 pension funds we track regularly with over combined assets of well over $20 trillion. We also track a good swathe or cross section of family offices, sovereign wealth funds, and just this year we started with endowments and foundations. But you'll see in all those five categories, it doesn't look very dramatic here, but there's a steady increase. This is in percentage terms, by the way. So at the bottom, you'll see 98% of the pension, of the LPs in all the categories. We're going to come into the individual categories in a second, but 98% are already allocating to renewables. And the smallest of these five is forestry, as you can see there. This year, 38% of this NLP sample constituency we've put together are in forestry, a slight increase from 36% last year. So I'm now going to get into the individual categories before we come on perhaps to the more interesting examples. To back up my point earlier, there's a lot of interesting things going on below the surface. So pension funds, 100%, there you have it, of pension funds that this very large sample of pension funds, over 400 or more now, and by the way, going to be increasing the EIM, Environmental Investment Monitor sample, they all invest some way or another in renewable energy. And as you can see here, 14.2% have increased their allocations this year over last year. So take, I don't know, whichever pension fund, let's take a hypothetical XYZ pension fund may have been doing whatever they were doing in 2024. 14% of those have decided to increase their allocations by investing in more renewable projects than they were doing last year. And in the family office category, there you have it, 94% are allocating to renewables in one way or another, and a whole third of them almost have increased their allocations. Therefore, they're investing in more renewable projects this year than they were 12 months ago. Sovereign wealth funds, it's exactly half of our sample have increased. So for those of you who are involved in marketing renewable energy schemes to LPs, it's obviously a very good idea to look at those who are already in that market who may be looking to increase their allocations. That's an obvious route to go. Sorry, we don't have the historical figures for endowments and foundations, because as I said a few minutes ago, we only started looking at this category this year.
Yeah, I'll just add that renewable energy is by and far the anchor for LP sustainable investment strategies. That is their sort of the main focus, I think. And throughout the EIM and the years that we've been monitoring their investments, we've noticed the trend in what other investments they are looking at within their sustainable investment strategy. So this is really going into this.
Yes, that's a very good point. And I should have perhaps made the point to endorse what Samantha just said. It's almost like it's the gateway. The first thing they will do when they've gone beyond their negative screening stage in life, when they're going to positively allocate to something in quote unquote sustainability, it's very likely to be in some area or another of the very large renewable category. And renewables is actually, it's almost too broad to be called a category. Of course, it covers, a number of different things from wind to solar, geothermal, and other things that are coming along. And it's going to, no doubt, carry on growing in all sorts of different ways in the future as a result of that too. So now let's move on to biodiversity, nature and agriculture. We should have put regenerative agriculture. So the very, very, very interesting area. We've had a number of discussions with a number of managers recently who are in that space. And that is, if I was going to forecast what's going to really go really very quickly or substantially and broadly over the next few years, whether you're talking to people in Australia or the US or in this part of the world in Europe, it is regenerative agriculture or aquaculture. There are some very specialist, very interesting boutique managers who focus on this. We all have to eat, of course, and doing that in a more sustainable way, I think, is only going to grow substantially in the coming years. So there you have 71% of pension funds we track are in this category that we've created, and a third of those have increased into other schemes in this sector that in comparison with last year. As for family offices, there you have it, 54% and 22% have increased. Sovereign wealth funds, interestingly, nobody in our sample have increased, but nearly half are already in there. And endowments and foundations, you see exactly half of those that we have been following are already in that area too. Moving on quickly, because we've got a lot of bits to get through. Forestry and timber, I'm always surprised this isn't a bigger category than it is. I do think, thanks to, and we haven't got time to get into it today, we've written about this in SII, thanks to tokenization, but especially thanks to what's going on in the carbon markets, we are going to see significant growth in forestry in the coming years. That really is, I would have thought, ripe for significant growth in the next couple of years at least. You can see the numbers by comparison with the other sectors we cover, a little bit lower in each particular case. And curious to know why no family offices of those we track or sovereign wealth funds that we track have increased allocations this year. I think that will be changing when we get into 2026 and beyond. Water. We've got to be careful with water, because water covers a multitude of sins, from very sustainable water projects in Africa, irrigation for farming or whatever it may be, reservoirs, all the things that you need water for, through to water futures on the Chicago Merc, I don't know, Evian bottles for drinking water, whatever it may be. We've tried to focus upon what the institutions, the LPs, are allocating to in the sustainable sector when we talk about water. Again, you will see the figures on your screen there. Small increases in some cases, and a good, healthy allocation proportion from the pension fund category. Right, so this is the last of the 5. Waste and the circular economy. Sometimes you see the term, or frequently nowadays, you see the term circular economy being used of all the areas of sustainability that's ripe for investment, which if you go to the emerging markets, if you're in Africa or India or some other places, nothing's changed in terms of refuse discharge for centuries. That has to be changed because the methane from open pits of refuse is quite staggering, and that really is something that the world has to do more about. It is in some respects, and let alone on people's health, let alone on the environment. So that is a category, again, one would have thought will be increasing in size in the coming years. So now that's the broad background to what we wanted to say. I said at the beginning, this has been a really interesting year for a number of reasons. That we're going to try and give you now a few examples of why we think it's an interesting year, because you won't, I don't think, be able to pick up on this in any other ways. Lots of databases on allocations where you get lots of numbers. We all use AI, including ourselves. But you can't get this through AI, you can't get this through the traditional databases, but we've got a lot of this stuff stored under our environmental investment monitor. So we see particularly growing interest in regenerative agriculture. I touched upon that a little bit earlier, particularly from family offices and endowments. And if you've got something you want to say to that?
Oh, yeah.
Samantha?
I mean, a famous family office, the Silver Strand, directly invested in an agritech firm, which is focused on improving the agricultural product quality as well as soil health. And then you have a recent example of Jim Richardson family office participating in the recent funding round for 4AG Robotics, which was led by Kibis Capital. Now, this firm manufactures robotics for mushroom farming, improving the resilience of the product itself, and it will get rolled out in many different harvesting techniques as well. So it's a very innovative area, I think, agtech is.
Yeah. And we're going to see more and more of that, I'm sure, in the future. And another thing we've seen more of, much more of this year is, although you didn't see it particularly in the headline numbers I just gave you, is more direct investing into forestry, particularly at last, one might say, because forestry has been around a very long time. Pension funds working together, sometimes with specialized managers to allocate to forestry projects. We'll probably see more of that. You got an example of that?
Yeah, you're seeing more active ownership through bespoke investment products and vehicles. One example is obviously Canadian pension fund CDPQ, who partnered with Chinook Forest Partners, the natural capital investment manager, to launch a new investment platform for forestry, wetland restoration, species protection, and carbon capture. So they're really seeing forestry as an ecosystem with a multitude of benefits, not just, woodland. And then you obviously have UK pension fund Nest partnering with Campbell Global to launch an evergreen fund of one to enter into forestry investments, which they haven't done so in the past. It's the new investment.
Thank you. Very quickly, because we've still got lots more to get through. Just take it on trust that we've got examples of what's going on in terms of battery storage. Finally, because it's been the Achilles heel of renewables, we see, especially I think from family offices, and some very techie people working in family offices are jumping on the battery storage. I was going to say bandwagon, that's probably the wrong term. Battery storage is becoming a much more important area of renewables than it was 12 months ago or 18 months ago. And finally, at the bottom here, jumping allocations into, this is the weird and wonderful stuff you see in sustainability. I'm not even sure I really understand what a biorefinery platform is, but we see some people talking about what they're doing with their allocations to biorefinery platforms. Grid tech is another new thing we've seen a lot more of this year. Low carbon fuels and so on. Have you got quickly an example of that just to prove to
Yeah, I
people we're
mean,
not making this up?
no. Greater Manchester, they have a very diversified renewable energy sort of investment. So they cover biofuels, biomass projects. You have the family office, their venture capital fund, sustainable conversion partners. They really focus on biorefinery, biofuels, that sort of thing. And then you also have for low carbon, no, for grid tech, you have Australian Ethical investing in climate tech focused venture capital funds. So you have an array of different investment products that are available to LPs that they are using.
Great, let's crack on. So, as well as seeing this greater use of interesting creative stuff, of which a very few limited number of examples were just given to you, we also see more direct investing and co-investing taking place. As I said in my introduction, co-investing in some cases isn't necessarily the right term. I think today I baptized the term partnership investing that's going on. And I think we'll see more and more of that. I want to make some points about the decline overall in the investing world of the traditional fund structure and much more hands-on investing by LPs anyway, in everywhere, every category beyond sustainability too. But here are just some examples we picked out for today's presentation. So ABP, the largest pension fund in Europe, as I'm sure you all know, is partnering with, is it Molpus Woodlands Group? You know anything you want to say about that, Samantha? Or
Yeah, APG on behalf of the pension fund APB acquired a majority stake in Molpus for US forestry investments.
right, very quickly because we've got to keep going. There you see some very famous and foundations and family offices combining together to jump in on the TransCamp initiative. Do you know about that? This is from I got
Yeah, it's
you.
there. It's focused on regenerative agriculture, helping farmers sort of improve crop yield, soil resilience, that sort of thing in the Midwest.
Right. And Hoop, that's a famous pension fund, isn't it?
Yes, they partnered with HESTA, the Australian Superannuation Fund, and Generate Capital to invest in Pine Gate Renewables.
Right. And then there's a famous Scottish pension fund there, Strathclyde. What are they doing with Temporis Capital?
They invested £15 million for renewable energy projects.
Right. Clwyd, another UK pension fund, this time from Wales. What are they doing with Capital Dynamics?
They tapped Capital Dynamics to have a separately managed account for Welsh specific renewable energy infrastructure
Yeah.
projects.
And then at the bottom, a very famous British pension fund. Too many British pension funds probably on this page. But, that was only announced very recently, wasn't it? We covered that just last month. What are they doing with AGR Power?
Well, they acquired a 25% stake in the company as well as another minority stake in Vadis, a waste management company. So they are quite active in direct investments.
Yeah. So the point we're trying to make here is that if we were sitting here 3 or 4 years ago and doing this, you'd have seen much more quote unquote blind investing into third-party funds, and the third-party fund manager would just go on and did what he or she wanted to do with that allocation under obviously the mandate of the fund, but then they would have met up a year later or whenever 6 months later, whatever it is, and made sure everything was going along in the right direction, and that would have been it. There's so much more, and I can't emphasize this enough when we look at what's going on. There's so much more hands-on interest from the LPs, whether they be especially family offices, even the pension funds, and the other categories we cover in terms of getting in at the coalface and doing it and being directly involved in the projects. That's an unquestionable trend that's going on at the moment. Right, micro investing is probably not the right term for this, but there's also, at the same time as the more direct, there's more interest by these LPs in all categories in getting into really smaller projects. Even very large pension funds are doing very specific allocations for, by their standards, very, very small sums of money. I love this one at the top. This is my favorite one of all. The PMV, I think I'm right in saying, is a Flemish, their Belgian pension fund, who are
Mhm.
investing the princely sum of 10 million euros to help develop antibodies in piglets, so a more natural way for pigs to grow up and not have them pumped with all the things they have been pumped with. That's that sort of thing is for me anyway. It's much more fun to write about than or cover than some of the stuff we've done over the years. So then you see, just take our word for it. There's a trend amongst the Australian superannuation funds to get into climate tech at the moment. We see quite a lot of that. Jump in and Samantha, if you've got any particular examples, otherwise I'll keep going because I'm conscious of the time. Danish teachers, obviously Danish pension fund, they are allocating 26 million euros to an emerging markets green energy strategy. That's Africa, I think, India, and maybe there, but maybe to one or two other places. And then what's this one here? Several UK pension funds are into capital dynamic funds.
Yeah, they're obviously targeting specific infrastructure funds. They generally have a ticket size around about 40 to 60 million, but they do tend to invest at similar times. So whether, they're advised by a similar advisory firm or work together, such as the local government pension schemes, they collaborate and obviously go off and invest in renewable energy infrastructure funds.
Great. And the last one, I thought we put this one down because Rockefeller is extremely famous and huge foundation, very well known. And one would have thought, given how large they are, a $50 million ticket would be not worth their while worrying about. But they are allocating into that smaller size into Ember infrastructure. I'm not sure that what's Ember infrastructure, Samantha, do you know?
It's a fund focused on climate resilience and adaptation, resource efficiency, that sort of thing.
Right. So there again, examples, and if we to repeat, if we were sitting here in a year or 2 years' time, we could have done more today, but we haven't got the time. And we do cover all this in obviously a lot more detail in SII, the publication. We could have picked, and we will be able to pick many more examples of this in terms of the trends that are going on out there. Right. So conclusion. I think I don't know anyone that's really picked up on this, but possible arrogantly, with the possible exception of us, is there are two things happening at the same time. One is that uh, LPs of different shapes and sizes, all the different categories of LPs, are moving away anyway from traditional fund structures. That's been going on now for a few years. I think it's accelerated this year. We wrote a white paper on that subject 12 months ago. That wasn't to do anything to do with sustainability, but we came up with plenty of evidence, and we picked Jersey as a fund jurisdiction we were doing it with. We picked the trends that Jersey has in terms of their assets going into Jersey entities keeps going up, but there is a decline in the number of traditional, even private funds, or especially private funds that are in that jurisdiction, but the assets are going up. So that's a general background trend. That's going on at the same time as we are seeing a significant across the board increase in sustainable investing. And I think in some respects, sustainable investing will lead that charge, and you'll see more and more creative structures coming along. I think it should be next year should be a really, really, really interesting year in terms of how this all develops. Because as I say, there's a lot of we all know this, very bright people, particularly family offices in all these entities, and they do like doing creative, interesting things and getting involved themselves. And that I think is only going to increase, whether it's in renewables or whether it's in some of the natural capital sectors. Now, something else that doesn't get picked up really at all, but is worth and very important to mention, I think, the governance of sustainable investing, whilst we're seeing all this fun, creative, diverse stuff going on, is, in my view, seriously lacking, not always, but often is. And we do come across examples of frauds. Normally, we're not allowed because we don't want to get sued to be too specific about them. You have to trust us that we hear these stories from every now and again. And actually, one we can talk about which we quote a lot because it's one of the few that do get into the press. Institutions love to sweep these things under the carpet when they happen. They do not want them to get into the press. But there's a pension fund from close to where Samantha is right now called Thurrock that lost about 31% of its allocation. It was a de facto actually co-invest with, I think, a firm called Rockfar Capital. And there was fraudulent activity. I think it not only got into the Financial Times, I think it even got into the Daily Mail. Absolutely no independent governance going along. And what happens, unfortunately, is that when you get into renewables or you get into other sustainable sectors, people think they're investing for virtuous reasons, and sometimes their guard is let down. But there are just as many, if not more, people who are perhaps not well intentioned in this sector. There's also been some absolute almighty cock-ups, nothing to do with how good or bad their intentions are, that have happened in some other areas too. We really do need much stronger governance. We bang on about this in our publication, The Ned. We're now trying to do something about that, and we're trying to introduce competent independent directors to managers that can help in this area. Because if this sector is going to reach its potential, it's going to have some independent governance oversight in the way that it not always, but often hasn't had today. Another conclusion is that we will see more of this definitely next year. Tokenization could transform many, if not most, of the sustainable sectors. I mentioned that in regard to forestry. That's perhaps the most obvious one. I think some of the natural capital areas beginning to tokenize, use tokenization options too. And carbon markets are also involved in tokenization. And carbon with forestry is quite a powerful combination. Overall, and this isn't, I've been around for so long, I can remember going back to the early 1990s. There are some differences, but there are a lot of similarity with what's going on in sustainability with the early stages of emerging market investing back in the early 1990s. There are, as I say, there are differences too, but I can see some similarities, and there are some problems that can and will and easily will be overcome, but they are there. Finally, before we see if there are any questions anyone sent in, what's happening at SII, Sustainable Investments Intelligence. We now have a facility we just launched this very, very recently called Investor Search that allows our clients to come to us and ask us to give them individual tailored reports on the sectors that they want on, with examples of the investment activity that's taking place. We are talking to one or two people about that. And across all the areas we've got, we do have the numbers, but we also have a lot more stuff below the surface and examples of that. And we are increasing very much the sample size of Environmental Investment Monitor. So subscribers and others should come to us. If you want to do searches in any part of the world, in any part of the LP universe, in any of the sustainable sectors we've been talking about today, we can hopefully provide you with some information you won't be able to get anywhere else because of all the digging around we've been doing for so many years now. And then with that, we're also doing quarterly reports on LP allocations to each sustainable sector for our subscribers. iFi Global Interactive is something that we again launched not that long ago. It allows in any of our publications, including SII, any of our subscribers to follow up with us on anything they see in that particular issue, and we will get back to them. If they want us to expand on something, we will do so. And I just mentioned in passing with regard to governance, we are advising GPs on partnership selection. It started with US managers coming to Europe, whether they want a fund director or a service provider or a jurisdiction. We do that anyway, and we're now trying to really push that out more into for sustainable managers, particularly boutique managers who would like help with partnership selection, maybe short lists of independent directors who can help them on their funds. So that's it for us as a very quick ramble through, and I will stop sharing screen and see whether we've had any questions from anybody.
Yes, we do. So the first question is, where do you expect to see the strongest growth in 2026?
Strongest growth in 2026. It has to be natural capital.
Yeah,
I might be wrong, and it could still be renewables again. But if you'd asked me a year ago, I would have said natural capital, and probably overall in numbers by far, it would be renewables, not natural capital. I mean, the TNFD, which came in it went through 2 or 3 iterations before the final thing came in about 2 or 3 years ago in September. It's making a huge difference, and it's been a really good development, and that's continuing to bed down. And it's giving a lot of people the wherewithal is perhaps the right term to allow nature investing to take off. And I think that will, this is very much a snowball type thing, and I think you'll just see more and more, especially into regenerative agriculture. It's such an obvious area of significant growth. There are problems in that area. We haven't got time to go into it now, probably, but unfortunately, there is a lot of fluidity in the data in natural capital, and those are problems that to be overcome, but I'm sure they will be overcome. I think I'm right in saying there's something like 3,000 different metrics that can be used for to measure what you're doing in natural capital. But someone can tell me that I probably may have that wrong. So that would be my answer to that question.
yeah. The final question is, can you outline how investor search works?
Investor, yeah, not much more than I just mentioned, but if you come to us and we have a chat with you and ask you exactly who are you looking for, and we can provide you with either a singular or a regular series of reports on whether you're looking for family offices, pension funds, foundations, endowments, whatever it may be. And we can make it very specific if it's certain sizes of either LP or certain sizes of project. I had a chat not that long ago with a geothermal manager, for example. We'll see whether something comes of that. They're probably launching their thing beginning of next year. Who could be interested in geothermal? Is the first time I've had a conversation like that. So it can be very specific into geothermal. It can be much broader. It can be just natural capital, global. Where are the best things? And so it goes from one extreme to the other. The best way to proceed on that basis is just to have a chat and see whether we can help you if you are interested in that. So is that you said that was the last question?
Yeah, yeah, that's it for today.
Well, then, thank you very much, all of you who were with us today. And if you have any questions, please do get in touch with Samantha or me. And hope we have actually. Oh, one thing I must mention before we go: on the 13th of November, we are doing a webcast with a panel on to present the results of research we've been doing with asset owners on sustainable investment trends, but particularly on climate. So that's in the afternoon UK time, and we're doing that with First Street, which is a climate risk firm based in the US, and you can find information on that in our various publications right now. So if you can join us for that, please do. Otherwise, hope you are able to join us again in the not too distant future for another of these discussions. So bye bye, everyone. Hopefully, see you the next time.